All right, good morning, everyone. Welcome to the Trade the Markets online seminar. Most of you guys we know from our trading rooms, and some of you are newer, and we're just going to be going through and taking you through all the concepts that we do, kind of from soup to nuts, from start to finish, so that you pretty much know everything that we know in regards to trading. And it's going to be conducted by myself, John Carter, and my trading partner, Hubert Centers, and we're both here in our Boston office, and we'll be sitting right next to each other side by side. So if you have any questions, what you can do is just type them in the window, and we can answer your questions for you, and we'll just kind of go from there. It's kind of nice. We do have people pretty much from all over. We've got, I know Jordan and a couple of people logging in from Canada. We've got 3 people from the UK, another in Europe, another in Shanghai. Then, of course, we're represented fairly well in the States. We're getting hit with a hurricane down in Florida, so I know a couple of people down there were having some problems, and some of those people have made it in. So I hope you're all boarded up and safe and ready to go. What I want to do is just real quick is just kind of give an overview of what this whole seminar is about. The main thrust of this seminar is just about taking advantage of short-term price movements in the financial markets. Specifically, most of this is going to be in the futures markets, but it also applies to the stock markets and options markets as well. And really it's a philosophy based on not trying to get out there and hit any home runs. It's just trying to setting up a trading program to just hit consistent singles and just a routine and a business plan to take steady profits out of the market. It doesn't mean that every trade is a winner, but it means that your progression in the markets in terms of profits is a steady uphill climb. So 2 steps forward, maybe 1 step back, but a steadily uphill climb in terms of generating profits out of the market. We're also going to spend a lot of time what I call staying profitable despite yourself. And what that means is that really the trader's number one enemy is himself or herself. You may know a trading methodology like the back of your hand, but the 1 or 2 times that you let emotions take over and you double up on a position, or you get emotional and you chase a trade, that can ruin your whole profits for a week. And some strategies in place to help you with that. Also, too, there's a lot of people out there that are going to know a lot about the markets. But what happens is if you use the wrong trading methodology for that market, you're not going to make any money. Also, if you know anything out there more than anybody else about a particular market, and you're trading a market that doesn't suit your personality, you're not going to make any money. And that's one of the reasons why I talk about the bonds and the euro, because I know that there's people out there that are good traders, but maybe they're trading the wrong markets for their personalities, and I actually find that's quite common. When everybody gets into trading futures especially, everybody jumps into the S&Ps, and the S&Ps aren't necessarily the best market for you to trade based on your own personality. For many people, the bond market is actually a much better market to trade, and for other people, the euro is a better market to trade. And then for some, if you're not making money in the S&Ps, the mini Dow is a better market to trade. And it's not knocking the S&Ps, it's just that that's the default market that everybody goes into. And it's just important to realize that there are other markets out there that may fit your particular trading style better. Finally, what we're going to do is part of the trading plan. Part of the trading plan is developing a business plan that suits your own particular style and keeps you in this game for the long haul. This is not about, trying to make a quick killing and then retire to the Bahamas. This is a lifestyle. This is developing a way that you can consistently take money out of the markets. It's not an easy. It's one of those things that it's not a. There's a saying about trading that trading isn't easy, or trading is very simple, but it's not easy. The methodologies are simple, but what's hard is staying consistent in terms of a trading plan and utilizing those methodologies. That's the tricky part, and that's what separates the people who can do this for a living versus the people who are just trying things out and kind of flailing in the water. So what are we going to cover? we're going to basically go through a couple of different sections here. We're going to talk about the hardware and software for traders. We'll talk about what we use, and then if you guys have any questions on your own hardware and software, we'll answer those. We're going to talk about the basic mechanics of the markets we trade. Now, for those of you that are familiar with futures and how they work, this won't be a real valuable section for you, but it is short. For those of you that have never traded futures, this will basically tell you how they work. But there are some important things in here too. If you develop a system for the Dow and a particular method of money management for the Dow futures, and then you switch to the Russell futures, you're going to get eaten alive unless you know how to transfer those same risk-reward parameters from one market to the next. So we'll be spending a little bit of time talking about that. The most important thing that we're going to teach you today is going to be right here, the indicators and internals, and basically how to read them, just right here. Let me underline this for you. Oh, I can't draw straight in the morning. The reason this is the most important part is that it's a short section, but we're going to go over it in depth. Okay, Malcolm. Hey, Hubert, can you take a look at this? Malcolm just had a question. Okay. And Malcolm, by the way, once this seminar is done, we're recording this too, so you'll have everything. But Hubert will take a look at that and help get you fixed up. Are you able to hear audio okay? So what we're going to do is, what we're going to be doing is on the indicators and internals. It's a very small part of the seminar, but it's the most important, and we're going to cover that here shortly. And what's going to happen is that's going to be the base or the foundation for everything else that you're going to be using. And once you can understand how to read the internals, that'll put you ahead of 95% of all the other people out there. Even though the setups we use are specific, mechanical, and exact risk-reward parameters, the basis of whether or not we're going to focus on longs or shorts is all dependent on the indicators and the internals. And I can't emphasize how important that is. And that's the best thing that we do, is knowing how to read the markets. And so that's what we want to share with you. And again, it's a really short part of this course, but it's the most important, and it'll form the basis for everything else that we're doing. Next, we're going to focus on multiple trade setups. Basically, these are all the plays. If you're in the trading room, you'll hear us talking about these throughout the day, most especially gap plays, pivot plays, scalper buys and scalper sells, the tick plays. We do a lot of work with squeeze plays, and we got a lot of work on that here for you. Plus, we're going to look over some bond trades and euro trades. And also, we have a section that's just on swing trading, most specifically for single stock futures, but also for the overall markets and everything like that. One of the things that we're going to do is, after we cover that, we're going to go into what I call daily market prep. And what that is, it's just a way to put together a game plan for understanding the macro market direction. And the main reason for this is I talked to so many people who missed the down move in 2000 when the markets crashed, when that was literally the best trading opportunity in history, that I just like to show people you don't want to fight the bigger trend. More importantly, you want to ignore what's going on out there in the financial press, because the charts don't lie. If you can read what's happening on the monthly and weekly charts, you can turn off CNBC, you can throw out the newspapers and focus on what's happening on the chart. And then by doing that, you don't get caught up in any hype to the upside, and you're able to stay on the right side of the trend. So that's pretty important. We're also going to go through a trader's business plan. This is a part that I find that most traders don't really put a lot of work into. I spend the last month of every year putting together a trading plan for the next year. And in that trading plan, I discuss the risk-reward ratios I'm going to take, the markets I'm going to trade, how many contracts that I'm going to trade for my accounts. That's important, because if you have two people following the same setup, and both have $25,000, and one guy's trading 7 contracts and the other guy's trading 2, guess who's going to be up at the end of the year? The guy trading 2. The guy trading 7 is going to blow out his account. So those are the kind of things that, of course, we've all learned this the hard way, but this is the kind of thing that will keep you alive for the long term. And then finally, we're going to talk about an attitude of a trader and just kind of the make or break factor in terms of, what's going on in your brain is going to make or break how you trade throughout the day and your successes at trading. And then finally, on Monday, because we're going to be covering all of our slides and everything Saturday and Sunday, on Monday, we're actually going to go through and do live trading. Now, we actually had kind of a debate about this where, all you guys are in here. It's kind of a private private room for the weekend. We debated whether on Monday to keep a separate room private just for everybody that's come to the online seminar, or to jump back into our live trading room with everybody else present. And our thought process was, we do a lot of work on psychology, and one of the things that we do is we actually watch people who are free trials to see what kind of decisions they make in the room. And you'll learn that you can actually use them as a contrary indicator. So if you see somebody in the room who's really, really excited about something that's happening, here's a classic example. We've got noises on our chat room, and when the market's going down, what will happen is people get really, really excited, and a new person will hit this button. So that's the dive button, and what will happen is when we hear that noise, we look and see, is that a free trial person who did that? And generally, if it is, that marks the dead lows of that particular move. So what we'll do is we'll hear that dive button because somebody's getting overly emotionally excited about being short, and then we'll go in and buy that. And it's like, it's a really good signal. So it's things like that, because of different things like that, with what we do is that we will actually we're actually going to go on Monday into the actual live room so that you guys can see all of the free trials and stuff like that with a new perspective, because you'll know what it's like now to be an experienced trader and watch some of the newer people like that. Conversely, what we'll also be doing is basically it's going to be your day in the room. Pretty much everybody else that's logged in there, we're just going to continue focusing on some of the seminar materials. They're really not going to know what we're talking about. But you guys will be in the know, and we'll be, kind of what's going on there. So I think overall that'll be better for everyone, and so that's what we're going to do. All right. So here's from doing this a couple of times in the past. Here's some advice in terms of going through the seminar. The main thing is obviously just to stay focused and pay attention. We're going to be throwing a lot of material at you. Not only does this manual have a lot of stuff in it, but as Hubert and I go through this material, we're also going to be just talking about stuff that's not in the manual. We're going to be talking about recent examples or people that we know and other things to do. And so what you want to do is just you don't want to get overwhelmed or anything like that. You just sit back, listen to what's going on, let it sink in, and just take a lot of notes. You've got a manual that you can write all over it. I'd recommend having a piece of paper and like a legal pad and a pen that you can take notes on while we're talking. And if you have any questions or anything like that, just feel free to ask. The easiest way is probably to wait till the end of a section and ask questions, but you don't have to. If you ask a question that's going to be answered later in the section, we'll just let you know and we'll move on. But feel free to type in questions and things like that. The main thing is it's more important to understand kind of the bigger picture attitude that you want to bring to the trading markets, as opposed to learning a specific setup. You're definitely going to come out of this with specific setups that you can use on Monday, but you also want to keep in mind that you also want to focus on the mental aspect of this, because if you have a setup but you don't have the right mental attitude toward it and you're not using the right money management techniques for that, you're not going to make any money. You got to have all three of those together. Also, too, what I found is when listening to other traders is that it seems like there's always a couple of things that say, they stand out to me, and it's like, aha, that was like a real important factoid there. Be sure to jot those down, because that's the main thing with trading is everybody's unique. The idea of something like this is to see how we do it, take down notes, and steal anything that looks like it would make your life easier in terms of trading, and incorporate that into your own trading plan. All right? Okay, so are there any questions about any of that? It's all pretty straightforward so far. What I'm going to do right now is I'm going to go through a little bit about my background, and then Hubert will go through a little bit of his background, and then we'll get started on the internal indicators and all the hardware and software and things like that. So basically my background is that I started trading in high school. My father's a broker for Morgan Stanley. He was then, and he still is, and I don't hold it against him. And he basically showed me how to trade options while I was a sophomore in high school. And this was about the year before, if you guys remember, in October 1987, there was a big crash, kind of like a Black Monday. And I was trading options actively during that time. And I had... I remember that particular day. I mean, what would happen is I'd place my option trades. I'd go to high school. I'd come home and call my dad at the office and get the quotes. Where did my Micron Technology puts close? Where did my OEX calls close? And I remember on that particular day, I actually ended up break even on the day because I had a position. Is when I first learned that markets can really move pretty hard. And I remember having a bunch of call options because I'd been making a lot of money on call options, but I decided to hedge it all with one OEX put. And even though all the call options expired worthless, I made so much money on the OEX put. Actually, it ended up being up on the day that it was a really good lesson in terms of being positioned for massive moves in the markets. And so I do bring a little bit of that philosophy today to my own swing trading and everything like that. I never had a desire to go into the brokerage business. I knew from my dad's experience that what he did was more in sales and in trying to get people to buy stocks or buy funds and stuff like that, and that's great. And his clients to this day are very happy because he keeps them in the right things. And like when the market was crashing in 2000, he had them in bonds and stuff like that. So he does very good with that. But I had no desire to do that. My desire was to use my own analysis and determine whether I was, and make a bet basically, and see if I was right or wrong. So basically what I did is I just continued to trade through high school. Through college, I was also interested in business. I had a mail order coin business. I spent some time on the West Coast going to school. And then I did a study abroad program for history and business out in Cambridge, England for a year. And then came back and finished up at the University of Texas as a Longhorn, mostly because a lot of my friends were there. And basically from there went into the business world, working for a public company. Worked up from a field guy to director of operations, and this was in the financial services industry. And during this whole time, I was trading heavily all the time. What my goal was to get to a point is that when I consistently made money, month after month or year after year, that I could leave my job and trade full time is what I wanted to do, because there was a couple of times where I'd make a ton of money. I remember one time in college where I had turned $12,000 into $175,000 trading OEX options over the course of one semester. Obviously, I had caught some really good moves, and then I basically wanted to use my wisdom to turn that money into $1 million. And by doing that, I then turned it quickly back into $5,000. So, I've gone through and I've had big accounts and blown them out. And by doing that, it, just kind of instilled in me, it's like, there's got to be a way to do this more consistently. And when I finally got to the point where I could do this more consistently, in 1996, I left and went trading on my own. And I had developed over the course of 3 years of trading full-time on my own a very specific game plan with what I wanted to do. And after trading for 3 years, and basically, trading's a lonely business. I mean, you're by yourself in front of a computer. You're staring at your cathode ray tube for hours on end. It's not a very social business. After doing that for 3 years and posting my nightly research, or just writing my nightly research, I just decided that let's get a little more active in the trading community. So I had started posting my research on a website. That developed into the website, what it is today with Trade the Markets. And it originally started off as Simpler Trading, if those of you who are familiar with that site, and met other traders along the way, like Hubert Centers and some other ones that came on board, and we all work together and just kind of trade. I'm a CTA, and I'm a principal in Razor Trading, which is a private money management firm. And I've got a lot of daily picks that are auto-traded by a number of brokers. And basically my whole background is I started off as a stocks and options trader, and now I trade mostly futures. And so my style is I intraday trade futures, and I swing trade stocks and options. And that's how I kind of balanced all that out. And I'd kind of hit up a little bit about this in the last slide, but basically it's like in my own trading. The first 5 or 6 years it was kind of tough. I mean, I didn't really have any consistency. I'd make huge wins and I'd give it all back, and this really caused me to go in what I call a trader's quest, where I spent a lot of time with other professional traders. A lot of them were profiled in Market Wizards. And the thing that struck me the most when visiting their offices is that they all had really simple systems, but where they excelled was in their trading methodology. I'd spent time with amateur traders who had systems that were just as good, but their trading methodology was a disaster. I mean, they just got over-emotional, they bet too big, and they were trading the wrong markets for their personality, and they would just get killed. Whereas these guys that were consistently making money, they had a simple system, but they also had where they excelled at was their execution, and that's really hit home for me. And once I revamped my trading plan doing that, I was able to move off and start trading full time, and that's what we want to teach you today too. That's the biggest thing I learned, is that you can know exactly what you're doing. You can know more about internal indicators, and you can know more about technical analysis than anybody else in the world, but if you apply the wrong methodology to your trading, you will lose money. You can also know exactly what you're doing, but if you're trading the wrong market for your personality, you are going to lose money. So those are the biggest lessons that I learned, and the things that we're going to be sharing with you over the weekend. This was obviously a real eye-opener for me, and we're going to be spending a lot of time talking about this later. So basically what I did with these traders is I kind of just took from them what suited me and my style and turned it into my own style. And today my trading is very calm, very consistent, as opposed to these chaotic ups and downs where, making $150,000, giving it all back. Make another $200,000, give it all back. And it's just a better way to do this. In addition to pure trading setups, we're going to be talking about the habits that most consistently cause traders to lose money, because a lot of times people aren't aware of how this works, and you can actually unconsciously sabotage your own trading. And until you understand how that works, you have the deck stacked against you. All right, so what I want to do real quick right now is I'm going to introduce Hubert. I'm going to have him come on here and just talk a little bit about his background, and then we'll jump into the hardware and the software and everything like that. I just need to find his slide. All right, I'm going to turn this over to Hubert, and I'll be right back here.
Hey, good morning, guys. Okay, let's go through first I'm going to go through my bio, which is pretty short. A brief history, how I started trading is, I was going through college. I got married when I was pretty young, and I started a franchise right out of college. And then from there, I was subletting some transmission business through a company that has a regional transmission chain. So, and my buddy's name was Dave, and one day I come in and he's eating lunch, so I'm sitting down next to him. I sit down and he's like, "Hey, come in and sit down next to me and watch me trade." So I sat next to him and watched him pull about $18,000 out of the market in like 4 hours, and then in the same sentence I was like, "Hey man, can I come back tomorrow?" And he's like, "Oh sure man, come back." So I pretty much every day after that, I sat next to him on a garbage can for like a month, and I was like, "Can I come back tomorrow?" And he's like, "Sure, you can come back tomorrow." So that's how I got started, and I was running my fleet maintenance company, which all it was like a quick lube on wheels, and we were doing business together. But that's just how I got started that way. But before I placed my first trade, I sat next to the guy for 11 or 12 months before I placed my first trade. So that's kind of my background. And I built up a couple other successful companies that I've sold off, and I sold off the fleet maintenance company too. But I pretty much come from a street smarts type mentality in my trading, but I use what I call the 3 Ps: planning, procedures, and policies for trading, just like I do with any other business that I build up that turns a profit and sell it off. So that's kind of my background. And from my mentorship, it was kind of just an old-fashioned apprenticeship, just like in the old days. I trained for a solid year before I placed my first trade. Started out with some seed money, and then we took $25,000 and over 18 months built it up to $860-some thousand before we took our first 20% drawdown. So that's kind of how I got started in trading. And back then, the methodology that we were using, it doesn't really work the way it does now. So we've kind of had to adapt and change. Yeah, you need to go to page 273. Yeah. So all we were doing back then, because the number one question I get asked a lot is, okay, how did you guys do that? All we were doing is we were doing a scan for stocks that were taking volume at the close. We'd buy them at the close if they were finishing at their highs and taking volume, and we'd flip them out anywhere from the first 2 hours, or we'd hold them for 2 days, and that's all we would do. But we were dealing with some good sized volume and stuff. So I ended up selling my fleet maintenance company and then just went straight into trading, and I've been in trading ever since. So that's kind of how I got started. That's about it as far as my bio goes. I'm not really a wild gunslinger type approach trader. I kind of am pretty methodical. I trade anywhere from 3 to 8 trades a day. I use 10-point stops and 3-strike rules. So if I have 3 consecutive losers, I'm done for the day. Pretty standard stuff. It's real common sense. It sounds really easy to do, but trading is not impossible. It's just really, 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 really hard to do for a living. I mean, you have to be consistent so often, so many times in a row. A lot of people get burnt out, or you'll find that a lot of people that we end up helping, they'll have 3 good days out of 5, and they'll end up pissing away everything that they made in the first 3 days. They'll give it all back in the last 2 days. Or they'll have four really good days in a row, and then boom, they give it all back on the last day. So the reason you're here is to learn a plan, how we trade, but ultimately what you need to do in this seminar is you need to take a piece of my stuff that you like, steal it, and make it into your own. You need to take a piece of John's stuff that you like, steal a couple pieces from him, make it into your own trading plan. Now, if you're coming in here with some preconceived notion of other trading styles, that's cool. Just, you want it to be really, really basic. I mean, if you cannot explain to a 12-year-old what you're doing trading, it's not going to work. You'll be like a deer in headlights syndrome, where you'll be looking at 14 different indicators. The moon phase and the waves have to match up before you place a trade, and it'll just drive you crazy. So the number one thing is keep it simple, stupid. Be consistent, and you have to have some common sense about it too. So I'm going to turn it back over to John, and we're going to mess around. We're going to go back up, slide back up. Where do you want to go to? Okay. I'm sorry. So we're going to start on gaps, and I'll see you guys in just about 10-15 minutes.
Okay, guys. Hey, I'm just gonna pause real quick here. We're recording this also for the archives. I'm just gonna pause this file and start a new one. So it'll be just a second here.